Aloha and welcome to the KupunaWiki radio show. This month we'll be talking about finances, and in the studio today we have our guest, Patty Van Kuren, Vice President of Private Banking at First Hawaiian Bank. KupunaWiki is Hawaii's senior resource. We talk to the best local professionals in the state regarding topics such as real estate, senior housing, estate planning, finance, and health, so our Kupuna families can find the best resources in the midst of a life transition. We strive to make sure our seniors are informed and supported every step of the way. Thanks again for joining us today. I'm Brandon Lau,
And I'm Andrew Young.
your host for the KupunaWiki radio show.
Our title sponsor for today is the Hawaii Kai Retirement Community, where they aim to provide a safe, nurturing, and caring environment to their residents in a community-style setting, similar to the comforts of their own home. To schedule a tour, contact 395-9599.
And now we have our real estate tip of the week, brought to you by Cheney Brooks Choice Advisors.
What is a home warranty? A home warranty is an annual service contract that covers the repair or replacement of important appliances and system components that break down over time.
For more information on home warranty or different services that maintain your property, contact the Cheney Brooks Choice Advisors team at 753-9033. Again, today we have our guest in studio, Patty Van Kuren, Vice President of Private Banking at First Hawaiian Bank. Welcome, Patty.
Hi, welcome.
Thanks for coming back. Now, I know you've started a new adventure here in your position as Vice President of Private Banking and Mortgage Loans. Tell us a little bit about what you do and what you enjoy about what you do.
Absolutely, yes. I've been in mortgage now for 12 years. Just joined First Hawaiian Bank at the end of 2017. And we started a mortgage banking origination team there. And what that is origination means we meet initially with clients, either when they're coming with their realtors, when they're just beginning to start the purchase process, or if they have a need to renovate their home, rebuild their home, or get money out of their home to either buy something else or help family. And that's where we come in. Residential properties, so anything from 1 to 4 units is what we focus on that they're going to be living in. Or renting out residentially.
You know, I think when people think about loan origination, it sounds like a very complex and scary process. And they don't know where to start. So obviously sitting down with somebody like you to explain the steps will really help. What do you find that's rewarding in your role?
Sure. You know, I've been doing this for 12 years now. I started at a very difficult time in the mortgage world, 2007. When everything was imploding.
Right.
And that was also a great time to help people because there was a lot of stress and a lot of uncertainty. And that's really what I've loved about the work. Meeting so many different types of people, helping so many different people in so many different types of situations. And your house is really the place where you live, the place where you make your memories, the place where you pass along to your heirs, right? Such an important asset, especially in Hawaii, where we have such high values. So being able to help clients achieve what they want with their homes, or whether it's for themselves personally or for investment, is what I really love to do.
Now, did you always want to be a loan officer growing up?
No, I didn't. I wanted to do advertising.
Okay.
Yeah, so I did take a little bit of a turn, but I always was very interested in finances. From when I was a little girl at 5, I remember my first allowance ledger, and I remember keeping track.
You had a ledger?
I did have a ledger.
I had a plastic container.
No, it was paperless. I was paperless back
Really?
then with
Time.
had my ledger with my parents, and they taught me very early the importance of saving, of not living beyond your means, and budgeting. So that's an important part in this process that we sit down with clients. It's not whether you can qualify, it's how much do you want to qualify for, how does this fit in with your other expenses, since there are so many different types of things we spend money on, private school a lot here in Hawaii, just the cost of electricity, water, food, right, is different than a lot of other places.
You know, I think there might be a difference on how seniors view financing based on their generation. For example, you have the greatest generation, which are savers, right? Perhaps getting a loan wasn't at the forefront of their minds. But then you have boomers who getting a loan is like getting more money to spend, right? It's a different perspective on the whole process. Do you find that the seniors now are more open to getting loans to help with different life situations and some of the things, like you said, some of the expenses?
They are. Again, it depends a lot, I find, on the entire family dynamic,
Mhm.
what's going to happen with the property. So that's part of the conversation that we have is, how much are you comfortable paying per month? A lot of times there's other family members helping. And so, is this really the right house for you, or can you downsize, right? Is maybe that the right time to downsize? So I don't know if it's so much of taking out money to spend. I think there is a lot of focus on how can I make this property last either for the rest of my life, or do I need to downsize and move into something smaller? Maybe I can have family move in and we can offset that way. Create a rental. That's been very popular with the new ADU laws. So these are all conversations, that we want to have with clients, because we don't want to just qualify them for the maximum so they can, spend. So yeah, I don't feel like that's too much, too much of the situation at this point. It's really planning for the next phase.
And I think a lot of people, we always hear on the news and financial networks things about interest rates, and are they gonna raise the short-term rate, or are they gonna do something that's gonna affect them as consumers? It's probably a little more complicated than that, but how important are rates, and how are rates doing today?
Well, rates are great. We just had the biggest 1 week drop in the
Okay.
last 10 years. So they are back near the all-time lows. We're about 1/4 to 3/8 in rate from the very lowest, which we haven't seen. Rates have been rising. You've been hearing the
Yeah.
news about the federal funds rate rising over the last year. And you're right, there's a lot of noise, right? Just
Right.
like anything in the news these days, it's all a story. And a lot of times we'll see the markets react strongly when we hear rumors of something happening or reports of something that's going to happen. And that's what's happened in the last week or two, is that the federal fund rate will not be going up anytime soon.
Which is a good thing.
Which is a great thing for our home buyers, people looking to even refinance, to get a lower payment, to take money out to do those renovations.
Yeah. Do you find that people are really rate driven when they decide who to use for their loan servicer? And what's your perspective on that?
Sure, and I think initially, yes, of course, we all want the very lowest rate because that will get us the lowest payment, and it's the largest expense that we have every month. And so we do find that that's the initial conversation. Most rates are pretty similar across banks.
Right.
And so once we start to, I have clients talk to different lenders, you get a different feel. It's a fit, just similar to a realtor or insurance agent, a financial planner. You want to find someone that you're comfortable with. There are still people out there who, you get those calls, right, on the phone, oh, let me help you.
Right.
The minute you maybe go online and you put your name into a website, and all of a sudden you're getting phone calls already. So while the rate may be the initial prompt to get someone to call in or inquire, it's really important to go more in depth about what your true needs are. And see if they're listening and giving you actual solutions instead of just recommending one product, one rate. You should always be getting several rate options when you're looking at doing a mortgage or even a HELOC. There's always options. You can pay a higher rate and lower points or fees if that's the right solution, or you can buy down the interest rate and pay more fees and get a lower rate. Sometimes that can be hidden in the conversation. And you always want to find that real clear description of what you're paying for and why.
And I think a lot of advertising would put the teaser rate up front because they want the person to call. But like you said, it's not about being sold on the rate, it's what kind of service are they going to get. And how are they going to be guided through the process.
And is it the right solution?
Right. So I would say if you're interested in finding out what's necessary and what's possible for you as far as financing, rather than just filling out an online form, call a loan officer that you know, and they can guide you through that process.
Do the consultation and find the right solution.
Well, Patty, I definitely want to hear more about the different options and products you have that especially affect seniors. So we'll talk more about that right after this commercial break.
We'll be back with more KupunaWiki right after this.
At Hawaiian
Good job.
Yeah, that was fine.
Yeah.
Not too many M's. Should get the counter.
So, are there any? We can share the story about. Yeah, about the exchange. But if you have any other senior-related story.
Have you ever been worried leaving your loved one alone? Whether it be illness, a fall, or just personal safety?
I think just the downsizing. I don't know how much of that you see anymore though.
Give you that peace of mind. With a simple press of a button.
Yeah, I see a lot.
Yeah, I feel like people are
Yeah.
staying put.
And provide expedited help
And
for
it's
friends,
not
family, or
necessarily a
members of
space
services.
issue.
To learn more
It's
about
a
electronic
safety issue.
caregiver,
Like,
call
is it situated
Priscilla
for
Wong at
long-term
954-0820
care
and mention
or living, I should
KupunaWiki
say.
to
Yeah.
receive a free gift.
It's children credit.
Welcome back to KupunaWiki on AM 690 The Answer.
If you're just joining us, we have in the studio Patty Van Kuren, Vice President and Private Banking Mortgage Loan Officer at First Hawaiian Bank. Patty, that's a very long title, but it shows that you're experienced in what you do. You know, one thing we didn't talk about the first time was what does it take to become a loan officer? I know you've been doing it for 12 years, but if somebody said, hey, I want to look for this kind of experience for somebody who serves my loan, what should they look for?
It's a great question, and I'm a little embarrassed to say that there's not as much of a certification as you would imagine. But this is also a warning. You know, you
Right.
want to find, a reputable company that you
Mhm.
trust that the loan officer works for, because
Right.
that is more of the criteria. If you're going to a bank where they have loan officers, most of them do have their bachelor's degree. A lot of them have MBAs. Or are CPAs in a past life and now have become loan officers. We do have to be licensed here in the state of Hawaii
Mhm.
through the NMLS system. It's a national mortgage licensing system.
Mhm.
And that does include some classes about a week long.
Mhm.
And that's how you become a loan officer. I think you do need a little panache for numbers, in my experience. That's why I do love the job, right? It's very black and white.
Right.
There's, these are the rates, these are the numbers. I think does it make sense? And that's how you become. a loan officer.
Although, Patty, in my experience, working with you in some situations, it's not always black or white. It's not always you're approved or you're not approved. But it sounds like there's a need to create options for people, right? And Andrew, I think you've had similar situations.
Yeah, I mean, not everyone is the perfect candidate for a certain type of product.
Right.
And so having, a good option of products to provide to the consumer
Mhm.
is important. And I guess, we mentioned it during the break of, there are options out there for seniors, which they may not know. And so what would some of those options be?
Sure, I'm glad you asked. Yes, when comparing rates, it is a little black and white, but then life happens,
Right.
And so it's about getting to know the client,
Mhm.
understanding their main goals. We can't always meet, every requirement, but then what's the most important and how can we fit that? So some good loan products, you hear, 30-year fixed rates, the requirements are very stringent these days. So we have come out with some options. One of the most useful ones I find for seniors is our interim financing loan. And this is a bridge product where we actually don't look at income to qualify.
Mhm.
So this can help when you're trying to, especially downsize your
Mhm.
home. It allows you to get a loan, even across 2 properties. So if you identify a property that's a little bit smaller you want to move into, we take a 50% loan to value across both properties.
Mhm.
And then you can buy the new property, move in, and then sell your other property. This can also work if you're doing just big renovations
Mhm.
on your property. We can take 50% of the value and give you a loan, short term. And then you could also move, eventually as well, into the new property while you're doing the renovations. So that would be the interim bridge loan.
So going back to your first example about this, using the interim bridge loan, so if somebody wanted to downsize, let's say they lived in a larger home that was getting hard to maintain, it had stairs, was multi-level, they wanted to get into something easier to maintain, single level, but they needed, let's say they're not working, so they don't have income to qualify for the loan. So you're saying the interim financing, utilizing their existing properties, could help finance the new purchase.
Correct.
Okay, because I think that's a problem we run into a lot of times with seniors is they're retired,
Yeah.
so they don't have the same income stream.
Or they're very fixed, like whether it's Social Security, so that it's not like they have additional funds to use. So having that asset, to use as their collateral, so to speak, right, is
Yep.
key.
And it works best if you are going to a less expensive property. And you also don't have a large mortgage on your current property, since it is a 50% combined loan to value.
Right.
And then, once you sell your larger home and you're in the smaller home, if there's a little balance left on the mortgage, based on your income, if you have Social Security or pension, we could see if we'd maybe keep a small mortgage on that after you complete the
After you
transaction.
transition.
Yeah, we could do a permanent loan, we call it permanent financing.
Okay. Now let's talk a little bit about the renovation part you talked about earlier, because I think that's another hot button for a lot of seniors. They're probably living in their property for 20, 30 years. Maybe the kids are gone, so they can feel like, okay, let's fix up the house a little bit, make it nice. It's not gonna get ruined by all the trampling of little feet. And they need financing to do it. So what would you offer in that situation?
So if they're going to remain in the home, there's really two main options. One would be to do a cash out refinance, and that would keep the payments at the lowest possible for the longest period. So that's why I say if you're going to stay in the home, 30-year cash out refinance. Based on the value, you can go higher than the 50% in the other loan, and you can get a nice fixed rate based on what's comfortable for you. And this is the conversation we have with clients. Sometimes we can give them more than they actually would need, but we don't want to. We want to make sure that the payment's comfortable. So we kind of get it all set, and then they get their cost to renovate. We make sure that it all is in line with how much they want to spend per month.
Okay.
So it helps when you're looking at renovation costs
Right.
to know how much you really want to spend, then you can stay within your budget. So that would be the first option. And the second is a home equity line of credit. That can be used short-term or long-term. You can do a one with no appraisal needed, under $250,000, and you can do interest-only payments. So those are low payments. There's a lot of teaser rates out there. You often hear in commercials. So that would be something, a low fixed rate for 2, 3, or 4 years. But then it can go adjustable, and that can be a little scary.
So for our listeners who may not be familiar with HELOC, home equity line of credit, that's a situation where you have a line of credit using your home as collateral, right? And you can use the money from the line and pay it back at any time. So it's not like a fixed loan product.
Correct. I call it the big credit card,
Right.
because you can draw in, you can pay down. It does start accruing interest from the day you draw it, unlike a credit card. And that's something else that a lot of people don't know is you can get it even if you don't have a first mortgage. So the home equity line of credit is a type of second mortgage, but you can get it even if you don't have a first mortgage.
I heard it said to me that even if you don't need it, you should always try to get the line of credit, especially when it's available. Would you say that's a good idea?
That is a good idea, especially for your listeners who are thinking about, haven't retired yet, they're kind of planning for the next phase. I would get as large a line of credit as you can qualify for, because once the income stream stops, then it's harder to qualify.
I'm curious if you do transition and your income changes, does the bank get notified, and is there any adjustment, or
There is
as
not.
long as the credit's there, then it's there?
Once your line of credit is there, it's not reviewed annually, it's just there. Usually it's a 10-year draw period, so you have
Okay.
10 years to draw in and out of it. After the 10 years, you would have to reapply if you wanted to keep it available. You can keep it available at a zero balance, and there's no charge, maybe just an annual fee, but it is a great thing to have, just in case, for just emergencies.
And in that situation for HELOC, your rates are not fixed all the time, right?
They're not, yes, but there are fixed rate options. So a lot of the products these days, you can have the big credit card portion, where you get a book of checks and you write checks, or you can withdraw at the bank.
Right.
But you also can fix in portions of the money you draw out, so you can have a principal and interest payment fixed, you don't have to worry about it adjusting.
With, I know you're not an accountant or CPA, so I'm gonna go out on a limb and ask this question.
Sure.
And you can decline if you would not like to answer.
Sure.
But with the changes that happen with the, I'll just say deductibility of interest at higher income level, et cetera, and HELOCs, are there any differences people might think of when either getting a mortgage or HELOC?
So, and this is, I'm not a CPA, but my
Right.
understanding is you can deduct up to $750,000 of mortgage interest.
Mhm.
That's on $750,000 of a balance. And anything that's used for your primary residence would count.
Okay, so
that's-
HELOC interest could count as deductible.
It could, yeah, so just talk to your CPA
Talk
about
with your
that,
CPA.
Whether it's in the first position or second position, exactly what it was used for.
Mhm.
Yes, so
Okay.
do consult a CPA, but it has to be, primary residence expenses.
Right, right. Now, there are some kupuna out there who've done very well with their saving and their income earning, and they have potential for investment purchases. What do you do in those situations? How do you help those kupuna?
So, finding a good investment property, we rely a lot on our realtor partners to go and find that property. And in this situation, it's more about the qualification, because it can be harder to qualify for an investment purchase. There's a more larger down payment needed. We can always get a home equity line of credit or get cash out of a primary residence or another property to help finance, assuming the numbers work. So we would just do a pre-qualification consultation, often with the realtor, where we're all talking about our goals and the qualifications and see if it's a possibility. It does seem that the multiple unit properties usually get a little bit more cash flow.
Right.
So especially if you can get a single family home with an ADU or even a 2-unit property, those seem to be a little better to get a little bit extra cash flow.
In fact, I've had seniors ask me if it's a good idea to put an ADU in their existing home, not because they needed it right now, but in case they needed that rental income for retirement purposes. So I think that'd be a good idea.
Absolutely.
Right? And that's where financing from First Hawaiian can help.
Mhm.
Right?
Absolutely.
Yeah. And for those people who are thinking, well, they're trying to plan, how can they transition their assets to, let's say, their heirs, or how can they position themselves for their future transitions? What are situations you've run into as a loan officer that maybe you're
So something that came up recently
Yeah.
was a client who wanted to position their the family in a different property.
Mhm.
And so they had a property and needed to do what we call a reverse 1031 exchange.
Okay.
So they identified a property and they already had an investment property. So they wanted to buy the property before selling their current property.
Right.
And this was a property that they wanted the family to live in
Mhm.
down the road. And so what we did was that interim loan, because
Okay.
qualifying you have to qualify for 2 homes at the same time,
Right.
which can be financially difficult. And because we cannot count rental income on one of the properties, we know
Mhm.
it's going to be sold.
Right.
So we did the interim financing loan, and then they were able to buy the property that they had already identified,
Mhm.
which was a perfect property, bought that, and then when they sold their other property, we then were able to do what we call the permanent financing, a 30-year fixed loan that will be with them and the family long term. And if the property is in a trust,
Mhm.
consult your trust attorney, but then the beneficiaries or the trustees of that trust can continue to pay any mortgage on on the
Mhm.
property, even after the passing, as long as the trust doesn't dissolve.
Hmm.
So that mortgage, even though these clients were a little bit older,
Mhm.
their family could continue to pay that mortgage and be set in that home for
Wow.
the next 30 years.
So that sounded like there's a couple of layers going on. But number one, sounded like they're doing a 1031 reverse exchange to try to mitigate paying the capital gains tax up front.
Yes,
Right. But to make this all work, they needed the financing as a bridge, right? Because they weren't having the same kind of income. So like you said, you did the interim financing, did that bridge loan and then into a permanent.
Mhm.
And now their family is set up even beyond their own lifetime.
Correct.
That's
Yep.
great.
And we were able to consolidate some bills as well at the end of the transaction when we did that final permanent financing, so that they're comfortable thinking about possibly retiring.
That's wonderful. Well, Patty, if our listeners wanted to hear more from you and they wanted to get in touch with you, how could they do that?
Well, I'm always available on my cell phone.
Mhm.
That's 953-0130,
Mhm.
the 808 area code, or via email, pvancuren@fhb.com.
Well, Patty, thank you so much for joining us. We appreciate everything you do for your customers and for our Kupuna.
Thank you.
Coming up next, we have our KupunaWiki Classic Trivia.
We'll be back with more KupunaWiki right after this. Have you ever been worried leaving your
Oh, good job.
That was good.
I know, that was really good.
Sorry, I forgot about it.
No, no.
Good lead-in. Oh my gosh.
So we're just going to finish up. We have 3 minutes. Yeah.
With a simple press of a button, an on-call staff member will be able to locate you and provide expedited help by alerting family or emergency medical services. To learn more about the electronic caregiver, call Priscilla Wong at 954-0820 and mention KupunaWiki to receive a free gift.
At Hawaiian Retirement Community, we help adults 55 and over live better and stay independent longer. Our independent and assisted living residents make friends and have the opportunity to try a variety of engaging activities, all while enjoying our all-inclusive community. Our staff is available 7 days a week to answer all of your questions. Please call 808-395-9599 to schedule a tour and have lunch on us.
Welcome back to KupunaWiki on AM 690 The Answer.
And now we have our KupunaWiki Classic Trivia, brought to you by Cheney Brooks Choice Advisors.
Aboard the steamship Mariposa arrived famous. Sorry.
No cuts, Andrew. No cuts.
Aboard the steamship Mariposa arrived famous child actress Shirley Temple with her parents to Honolulu. When was the year that she visited Honolulu?
For a chance to win a Long's gift card, be the first person to call us with the correct answer at 808-792-5188. And remember, KupunaWiki is live, and we have our next in-person class on Saturday, April 20th from 10 to 11 a.m. at Hawaii Kai Retirement Community. And we'll be having Nick Abbott, a financial advisor at Mission Financials, and he'll talk about tax planning tips. To register, please call us at 808-792-5188 and register, or you can go to our website at KupunaWiki.com.
Again, we'd like to thank this segment sponsor, the Hawaii Kai Retirement Community, for providing local seniors independent and assisted living opportunities within their all-inclusive community. To schedule a tour, contact 395-9599.
Well, thank you again for joining us today on the KupunaWiki radio show, Hawaii's Senior Resource. We strive to make sure our seniors are informed and supported every step of the way. Again, I'm Brandon,
And I'm Andrew.
and I'll see you back next time on the KupunaWiki radio show.